Hey, what's up, guys? It's Jamie. I'm just doing a quick video this morning as we end February 2022. War in Ukraine, Russia invaded Ukraine. I have to get into all that. This is just my position right now. For me, I just continue to add to my Roth IRA and Fidelity. And of course, I have my stocks and options that I play with each week. Now, again, I'm a middle-aged dad, father of four, just sharing his investment strategies. I'm not a guru. I just talking to a regular guy, just saying, hey, here's what I'm doing. Like if we're at the water cooler, or if you're a buddy of mine, I do this a lot for friends and for my kids, as I'm trying to teach them about what I'm doing. And I've had a lot of failures, right? But every time I'm like Doomsday from Superman, if you're a fan, where I get a little bit more resilient and better each time, right? So it's tough to kill. So I try not to risk any money that I would be devastated to lose. I mean, I think we've made those mistakes in the past, some of us, but at that point, I'm no longer doing that. So this is my Robinhood account. I just talk about these two plays right now. I have these two portfolios. I try to keep in this account, I usually go up to 10 grand and then I'll pay myself and, start over with anywhere from 500 to 2,500 bucks. Right now I've been stuck at 3 grand the past few months with some of the stuff happening. But my goal is this year to get to 100,000 in this account, 100,000. And the strategy would be, if I go from 10 grand to 20, I'd probably pay myself half and then just kind of keep going and compound. And that's the plan. So going into the rest of the year, we got 10 months to go. So some of these plays, I have to really pay attention as I step up instead of just, like I don't go all in on something. So if I have money to invest into a stock, I'm looking at Lucid. I like Lucid. I did pretty well with Lucid. It's back down to a level where I was in last time. I had got into it when it was Churchill Capital. I've talked about it before. I'm not here to do a deep dive or analysis about the company. There's people far more experienced and better at doing that than me. I'm just sharing the plays that I'm making. So right now, if I was going to buy 100 shares, I think it's 26 bucks. So I'd have to spend around $2,700 to buy 100 shares of that, which I will buy some shares in my long-term hold accounts, like my Roth IRA and Fidelity, for example, because I think it's a good company to hold. But if I was buying another 100 shares just to kind of flip, I'd have to spend $2,700 or so, depending where it goes this week. Now, if I'm not going to hold it that long. I probably would only hold it until the next gain, right? Until I could make 20% or more on my money. So I can either buy it almost a year out at January 2023, if I was going to buy one contract, or almost another year out. I know it's not quite that, but almost 2 years out, right? So, and I'm just going to show you that really quick. So this would be a quick one. So if I was going to buy it in January of 2023, January 20th is when that buying a call would expire, right? In about 11 months, 10 months. So if I was to buy it today, that'd be $2,700 just buying 100 shares versus the strike price, the current the share price is $26.70. So if I went in the money and I said, okay, I'm going to buy a call at $20 strike price, it says I have to get to 30 to break even because it's going to cost me $1,000, which is $10.18 times 100, which is $1,018. Granted, wherever that falls, if I click that and I looked at it, I'm like, okay, is a spread of 990 to 1045 pre-market. I don't know where that'll happen, where that'll go come 930. But if I was to buy it right now, my max cost is $1,020. Now I can put I'm willing to pay $125, right? And then $1,010.25. Then that means I pay $1,025. So whatever that numbers is, just for illustration purposes, let's say it was $10. So if it was $10 for one contract, I'd have to be willing to spend $1,000 versus $2,700. So it's a discount of $1,700 to own the same 100 shares that I'm not going to keep forever anyway. So that's the way I look at it. And then I'm like, all right, so that'd be $1,000. So if I go an extra year, same strike price, $20. I have to get to 32 instead of 30. So it's $2 extra right? Where the upside of this stock at one point was $64, $65, all-time highs. So it's going to cost me around $1,200, $1,300. So let's say $1,300. So I'd have to spend $300 more, 30% more, or 20% more, 25% more to have a whole nother year. I'm willing to do that. I would be willing to spend that extra $250 or so to have a whole year for an upside if I was going to do a call versus a put. You know, be a little bit different, of course, right? It's going to go the other way. But if I thought it was going to go down, right, it's going to cost me $800 if I was doing that, right? Max cost. So $800 if I said, no, this thing is going to go down to 20, right? And then it would be different. So, but I'm not doing that. I think there's upside to this company. And for 2 years, minimum risk, I just have to be able to front $1,200, $1,300 to do that. I'd be willing to do that. So if I was going to buy 100 shares at $2,700, I might as well buy 1 or 2 contracts, you know, for the upside that it goes over $32, and I can make money in between that. But let's say it goes to 45, 55. That's pretty good. But again, it's just your own risk assessment, what you're willing to put in there. So the other one I like is PayPal. I'll get into that the next video because I want to keep these under. I'm trying to keep these between 5 and 10 minutes. But Lucid is the play that I'm looking to make this week, meaning like enter in. And hold for probably I'm not going to hold it for 1 or 2 years, but like with a contract, a call contract, 1 to 2 years out. Now, here's the other thing I will mention before I go. If you have 100 shares, right, and I own them at a strike price of 20, then what I can do if they're 2 years out, right, is I can go 1 week out, or let's say 2 weeks out, and I could say, okay, I'm going to sell a call, and my strike price is $20. Right? So if I said, hey, I'll be willing to sell those, I think I got to get to 30. That's what it said. 32, actually. So if I wanted to get to 32.5 while I'm holding that contract, right? While I'm holding it, I can even go 33. I would make, I could put one contract at 0.7. I'd make $70. Right? I know that's not a lot. But, I mean, I'm going to hold it anyway because I think it's going to be a little while before it pops. And if I had to, I'd buy the contract back. But I can make $70 while I'm holding those 100 shares 2 years out, selling that contract. So, $70 times, say, 26. Say I did that 26 cents. Yeah, I can make $1,800 if I did that for 1 year while I'm holding that contract. Again, I'm just giving you a scenario. I'm not saying that that's what you should do or that it's going to happen that way. It could be lower, it could be higher. I could get rid of this in 2 weeks. I could get rid of it in 2 months. But I just like to look at that stuff. I like to say, hey, you know what? If I'm going to hold them for a year because I think it's going to be about 6 months to a year before I'd get rid of it, I tie up that money. I might as well make a little bit of money on it before I actually execute and sell it for it to get over $32. Now, if it happens faster, I mean, even if I just make $70 for, for 2 months, right? So I do it 4 times. So I make, $200-$300 just for holding it anyway. So that's how I look at stuff now. And I like selling premiums. If I was going to own the 100 shares anyway and keep, I would do that. That's what I would be doing. So if you have 2 contracts, then you just multiply that times 2, right? And so on and so forth. So a lot of you guys know this. Some of you don't. If you don't, you can ask me a question. There's lots of videos out there doing that. This is what I've learned, and this is what I'm trying to do. I teach you, like, if you have money in the bank, right, in a savings account, you're not making that kind of return on your money, right? So if you took $1,000 and put it into a savings account, you're not going to make. I'm just giving you this a scenario. Like I buy $1,000 or $1,300 worth of Lucid for 1 year, for 2 years, and I'm like, I'm going to keep it for 1 year in there probably. So if I made $70 times 26 weeks, I'd make $1,800. So I'd get 100%, over 100%. I'd make 140% return on my money if I'm right, times 100. Yeah, 140% on my money if I did that. So I'm not expecting that, but I'm just saying, like, you're going to sit on it anyway. Why not do something where you feel like there's an upside? So anyway, that's my strategy. And I'll see you guys when I do PayPal, and I'll talk to you more about the real estate stuff throughout the week. Hope everybody has a good one. Talk to you later. Bye. See you next time.